Data out this week shows the economy is still showing signs of strain. Business confidence deteriorated in the second quarter. The Bureau for Economic Research says close to 3/5 of respondents in the Business Confidence Index regard the prevailing business conditions as unsatisfactory.
The index shows that after surging from 34 to 45 in the first quarter, the BCI deteriorated to 39 in the second quarter. This as the euphoria of a change in leadership wears off and the reality of a slow economy kicks in. The mining sector continued to struggle. Mining production declined by 4.3% year-on-year in April from a 8.5% fall in March. The biggest drag on the annual figure was the platinum group metals category. Economists expect stronger global demand and firmer international commodity prices to support production and exports going forward. Hard-pressed consumers have stayed away from the shops as the high cost of living sinks in. Retail sales for April decelerated sharply to 0.5% year-on-year from 4.6% in March. The rand strengthened slightly against the dollar in morning trade. Rating agency Fitch is expected to keep South Africa's rating unchanged when it issues a rating decision later tonight. The agency affirmed the country's rating at BB+ with a stable outlook in November. Economists say the agency will most likely acknowledge the positive policy developments and the improved outlook under the country's new leadership. The land expropriation without compensation debate is also expected to be highlighted.
I think in line with the others, probably they'll have a stable outlook and maintain their rating. They obviously, along with the other rating agencies, know that change can't happen overnight. So even though we've had some negative economic developments in the first quarter, they'll be looking ahead and anticipating what might actually happen over the next couple of years. So we hope that they'll keep things unchanged. We think they'll keep things unchanged and they'll have a stable outlook.
Stats SA will next week release the consumer inflation figures for May. Economists expect the CPI to tick up to 4.6% year-on-year in May compared to April's 4.5%. Elise Kruger of NKC African Economics says upward pressure stemming from the VAT hike could filter through the numbers in May and beyond. She says May has also seen the second month of a hefty fuel price increase with 49 cents per litre increase in the petrol price. The Reserve Bank will release the quarterly bulletin, expected to show the current account deficit deteriorated in the first quarter of the year. As a ratio to GDP, the current account deficit is forecast at 4.8% in the first quarter compared to a deficit of 2.9% in the last quarter of 2017. Economists say this is driven by a notable deterioration in the trade account, while the GDP has also disappointed in the first quarter. Gloria Sefakomosi, SABC News, Johannesburg.